journal entries, also known as journalizing. So what is journal entry? Recording of business transaction in a book called a journal is known as journal entries or journalizing. Journal entries are first recorded in this book called journal. So here we come across the term journal. So what is a journal? It is the first book in which all the business transactions are recorded. In this book's journal, transactions are maintained on daily basis and in chronological order. That means in order of date. Entries are made from cash memo, other vouchers, bills, invoices. So these are the documents which are used to make the entries in the journal. Now we will try to understand how to make journal entries. Entries are made on the basis of rules of debit and credit. And these rules of debit and credit are different for three different kinds of accounts. That is personal account, real account and nominal account, which I have already explained in my previous videos. So please go through those videos to understand the rules of debit and credit and also the meaning of personal account, real account and nominal account. Here I have summarized the rules of debit and credit. On the debit, we'll be writing expenses, assets in, receiver and losses. On the credit, we'll be writing income, gain, assets out and giver. Now let's go ahead with the journal entries. We write journal entries from the transactions and we get the transactions from the vouchers like cash memo, bills, invoices and so on. Some examples I have given to you here. Purchase furniture from Mohit on credit rupees 5,000. In every transactions you will find two parties. Minimum of two parties. One may be giving, another may be receiving. Let's find out who are the two parties in these transactions. And since there are two parties involved in every transaction, so in every transaction there will be two accounts affected. Two accounts affected. These two accounts will be recorded from the viewpoint of these two parties. Now since there are two accounts affected, we will have two aspects. There will be two aspects. These aspects are called debit aspects and credit aspects. And both these aspects will be recorded in the journal. This method of taking two accounts from the transaction and recording it in the journal is known as double entry principle. So journals is prepared by following double entry principles. So double entry principles means taking two accounts from a transaction and record it in the books of accounts. And the value of both these aspects will be the same. If the debit is 500, then the value of credit aspect will also be the same because the give and take will always have the same value. Now let's take this transaction 1. Purchase furniture from Mohit on credit rupees 5,000. Who are the two parties here? The two parties here are the firm, that means the business, and Mohit. So you will have two accounts, one for business, another for Mohit. Now, business, what did the business do? Business purchased furniture. That means the business got furniture from whom? From Mohit. From Mohit. Mohit should get cash, money. But let's see, did Mohit get the money? No. It is on credit. So Mohit did not get cash. There is no payment made immediately. The payment will be made later. Very important point in writing journal entries is to find out these two aspects in every transactions. Like say in the first transaction, what are the two aspects? What did the business get? Business get furniture. So one of the aspects is furniture. And given by whom? Given by Mohit. What did Mohit get? Nothing immediately. He is going to get in the future. Okay. So here these two aspects will be taken, furniture and Mohit. Check the second transaction here. Sold goods for cash rupees 2000. Who sold? Business sold. So one aspect is business. Sorry, one party is business. And who is the another party? The another party will be customer. So that means again here there are two parties, business and customer. Again here we'll have two accounts affected. So what are these two accounts here? Sold goods. What you are doing? You are selling goods. So goods, and in return what you are getting? This is sold for cash. So you are getting cash. The business is getting cash. These two important things are here, goods and cash. So the third one, purchase goods rupees 1000. Who purchased? Again the business. From whom? Name is not mentioned. So it's understood from someone else. Say XYZ. So there is a supplier here. Two parties involved again. So two accounts. That means every business transaction will have two accounts affected. So we need to find out two aspects. Now what are the aspects here? What is purchased? Goods. So your business is receiving goods. What is given by the business? Nothing is mentioned. Purchase goods rupees 1000. Nothing is mentioned. So we'll understand that the money is given. So purchase goods and the money is paid. So here another aspect will be cash, that is 1000. So one is goods, another one is cash. Withdrew from bank. Who withdrew? The business withdrew. What? Money. From where? The bank. So what is withdrawn? Money is withdrawn. That means cash. From where? From bank. These two accounts are involved here. Paid rent by check. What is paid? Rent. To whom? To someone else. How is it paid? By check. Whenever you get the term check, we use the word bank because the payment will be made from bank. Money will go out from bank account. Paid interest on loan rupees 500. What is paid again? Interest on loan. To whom? To someone else. How it is paid? Nothing is mentioned. That means it is paid in cash. So money is going immediately. Received cash from Anand. What is happening here? Money is received. So cash is important. Received from whom? Here we know it is received from Anand. So these two aspects are here. So these two aspects will be recorded in the journal. Now in order to record these two aspects, you have to find out what is debit and what is credit. Because in every entries we will have debit aspects and credit aspects, and these two aspects will be taken to make the journal entries, right? Now these aspects, whether here we have already found out the aspects. In number one it is furniture and Mohit, so one has to be debit, another has to be credit. Similarly number two, goods and cash, one has to be debit, another has to be credit. Likewise 3, 4, 5, 6, 7. Now let's find out what is debit and what is credit. Say number one, furniture Mohit. Furniture is an asset here. Now either the furniture will come or furniture will go from the business point of view. Purchase furniture. When furniture is purchased, definitely furniture will be in. So it is asset in, furniture is an asset. Furniture in, that means this furniture is your debit. Then Mohit. Mohit is giving the furniture. Mohit is giving furniture, so he becomes receiver or giver, he becomes giver. So giver means credit. So Mohit is credit. Sold goods for cash rupees 2000. Now when there is a goods, we will not use the word goods in journal. We will either use sells or purchases depending on the terms used with goods. Now in this case the term used is sold, so we'll use the word sells. Here we have two accounts, sales and cash. Sales, again let's come to the rule. Sales, is that an expense or income? It is an income. So income should be credit. And cash is an asset. So cash is coming or going? It is coming into the business. So it is debit. Number 3, purchase goods rupees 1000 cash. Again there is a word goods. We'll not use this term in the journal. We'll use the term or the word used with goods. What is the term used with goods? Purchased. So we'll use the term purchases. And purchases is an expense because the money is paid. Expenses needs to be debit. So this is debit. Now purchases is debit. So again here cash. For cash is coming in or going out in this case. Purchase goods. So when business purchases goods, money comes or goes? Yes, it goes. So money is going here. Assets out. So it is credit. Withdrew from bank rupees 500 cash. So here two aspects, bank and cash. Money comes into the business. So that means the cash is coming. Well, that means asset in. In means this is debit. And if this is debit, this bank has to be credit because one is debit, so another one will be credit. Take for this, paid rent by check rupees 1000. Rent, the rent is an expense. So this rent is debit. And bank means money is going out. So money goes out. Out means credit. So this bank is credit. Paid interest on loan rupees 500. Again interest on loan is paid. It is an expense. This is your debit. And cash will be your credit. Why cash is credit? Because again it is out. Going out. Received cash from Anand. Cash is received. Means money is coming. Asset in. In means debit. So this is debit. Anand. Anand is the giver of cash. So giver means credit. It is credit. So after finding out what is to be debited and what is to be credited, we'll write this debit and credit in a book called journal. So now we'll have journal entries. So this is a journal format, a book journal. Your journal is divided into 1, 2, 3, 4, 5 columns. The first column is for date. This is the second column where we will write debit aspects and credit aspects. This is the ledger folio. That means here we'll write the page number of the second book called ledger, where these transactions will be taken later on. These are the amount columns for debit and credit. Now let's take the first transaction. The first transaction is purchase furniture from Mohit on credit rupees 5000. We have already found out the debit aspects and the credit aspects. So we'll be writing this debit aspects and credit aspects in the journal. So your journal will always start with the debit aspects. Here the debit aspect is furniture. So since the date is not mentioned, I put the question mark here. So your debit aspect is furniture. You have furniture account debit. Then we'll write the credit aspect, and the credit aspect is Mohit here, and your credit aspect will always begin with the word to. So to Mohit account credit. And what is the value of this transaction? 5,000. So we'll have 5,000 on the debit and 5,000 for the credit. And this journal entry should be supported with an explanation, and the explanation will be the same. Here you can write down being purchased furniture on credit. Okay, this explanation is known as narration. This is called narration in journal, a short description of the journal entry. Sold goods for cash rupees 2,000. What are the debit and credit aspects here? Here debit is cash and credit is sales. So you will have the entry cash account debit to sales account credit, and then the narration being sold goods, and the value of the transaction is 2,000. So we have 2,000 on the debit and 2,000 on the credit. Purchased goods for rupees 1,000. Again we have the debit aspects purchased and credit aspects cash. So your journal entry is purchases account debit to cash account, narration here being purchased goods, and the amount is 1,000. So we have here 1,000 on the debit and 1,000 on the credit. Another one, withdrew from bank rupees 500 cash. So cash is debit, bank is credit. So your entry becomes cash account debit to bank account being withdrew cash. 500 on the debit, 500 on the credit. Paid rent by check rupees 1,000. So what is debit here? Rent is debit and bank is credit. So what will be the entry? Rent account debit to bank account credit. Amount is 1,000, 1,000, and you will write the narration being paid rent. Next you have paid interest on loan rupees 500. Okay, so again two aspects. Interest on loan is one debit, cash is credit. So we'll take the interest on loan first. Interest on loan account debit to cash account, and the amount is 500. Then again the narration being paid interest on loan. Then the last one, received cash from Anand rupees 500. What is debit? Cash. And what is credit? Anand. So you have cash account debit to Anand account, and the amount is again, amount is 500, 500. This is how the journal entries are made. What are the steps in journal entries? Let's check that. The steps that we follow in journal entries. Number one, find out accounts affected. Find out the accounts affected in the transaction. That is aspects, the two aspects. Number two, use the rule of debit and credit to find out what is to be debited or credited. Then number three, record them in the journal. Record them in the journal.